Okay. All right. And let's see what. All right. Hey guys, how you doing? This is Dr. Greg McLeod from Elite Traders University, and it's so good to be with you here in this Thursday Power Hour. Just trying to see if we are streaming. Let's see if we are streaming somewhere, and we might be streaming somewhere where I put a little stream key in the group. And let's see if we are streaming. We are streaming. Yeah, we are streaming. We're streaming in the wrong spot, right? All right, and let me go ahead and let me grab, copy the link, come back to the group, and pop it in here, right? Okay. I think we're now we're streaming. Hey guys, how you doing? This is Dr. Greg McLeod from Elite Traders University. So good to be with you here on this fabulous Thursday. This is the 19th. Yes, the 19th of that's 19th of September, and good to be with you here. And we're going to be talking about one of my favorite topics. You know, every week. We go over a deep dive in a topic of either my choice or your choice, and we go on a deep dive, and this is a completely free education, give you a sample of what goes on every week in the Elite Traders University. The Elite Traders University is where we help traders become professional traders in 90 days or less using my three-step approach of analyzing and entering the market with low risk, high probability entries for big profit. We've got traders from all around the world who have passed their prop challenges, who have scaled up small accounts, who scaled up large accounts, even some that are managing money for large hedge funds and firms too. So, and a little bit about myself. Again, my name is Dr. Greg McLeod. I'm a former currency analyst and trader coach at one of the world's largest forex broker dealers in the world, Forex Capital Markets. And my articles and my trainings are still being used today in the forex industry. I've also done live events here in Vegas, where I live, and on stage trading in front of large crowds who are, because most people are afraid to trade live, and they should be afraid if they don't have a good system. And I invented the pip and run system. Pip and run system is something I developed over 20 years ago. It's hard to find anything on this planet that still works after 20 years. Your car, your dishwasher, your husband or your wife. After 20 years, it goes kaput, right? But the pip and run system has generated profit. So great for you guys to come together. And though I'm not going to give you all the secret sauce, I'm actually going to give you some actionable tips and tricks. One of the pillars of the pip and run system is being able to use one of my favorite things that it's pretty generic, is Fibonacci. Now, Fibonacci was was invented many years ago, but was really discovered by an Italian. He actually went, Leonardo the Pisa Fibonacci, the same Leaning Tower of Pisa guy, he didn't create Domino Pizza. He created the Leaning Tower of Pisa, and he actually went to the Far East and he brought back a couple of things when he went back on this trip. He brought back, in the old days we counted with Roman numbers because it was like the Roman Empire, right? Remember the Roman numbers? I, V, V. Okay, those are the. So he brought back Arabic numbers 1, 2, 3, 4, 5. So he brought that back. Okay, so he's a big bring that back. Just like Marco Polo bringing back noodles from China, right? And now you have pasta in Italy. Italy's really good going over other countries and bringing stuff back, but we probably wouldn't have had it if they didn't do that. But he did the same thing, and in fact, you find some really early Fibonacci stuff that wasn't called Fibonacci, but the same sequence of numbers was brought back from. You can find some from India. You can find many poems written in the Fibonacci method or mode, right? And so The history of Fibonacci is very, very intriguing and very, I'm probably going to have a lot of time to go into it, but it's really something that deals a lot with sacred math. You can find it in nature, the way your ear is formed, the way your face is formed, in proportions, the distance from your nose to the top of your forehead, and the distance from your nose to your chin. When you have this proportions of 382, 50%, 618. Those are Fibonacci numbers, and those are derived in a certain way. You add the first two numbers together, and that gives you the third number, right? And if you take those numbers and divide them into each other, you get those Fibonacci sequences. So you can find in nature the spiral galaxies, the way corn grows, the way flowers grow. You can find it in music. You can find it even when I'm looking out the mountains. It's almost like the fingerprint of God, especially the numbers like 618 and 382. I'm going to share some charts and show you how we use Fibonacci and how you can actually profit from it. So let me go ahead and share my screen. And again, why do we want to learn Fibonacci? Because it provides what Fibonacci is: a special case support and resistance. Special case support and resistance. And remember, knowing the foundation of trading is what? Buy low, sell high, buy at support, sell at resistance, right? So we want to be able to do that. So I'm going to find my screen button to share and share screen. And a big welcome to all the newbies. Demian, nice to see you. They got a new person there. I also want to welcome T. Has joined Pip and Run. We're going to onboard him. And so, I'm going. If you stay to the end, I'm going to have a special deal, back to school deal on the Pip and Run Forex mentorship. And so, if you stay to the end, I'll be. I'm going to share that with you. And so if you got some friends or anyone that's interested in seeing their trading go to the next level, I want to go ahead and bring them on board, shoot them the link, and let them join in and get some knowledge on how we use Fibonacci. Now, okay, so you should be able to see my screen. Try this again. Try to share sound too. In case I take a trade, right? It'd be kind of cool, right? Right. Okay. So I don't want you to see all my crazy bookmarks. All right. So I took some trades on Kiwi dollar a while back, but let's start with the Fibonacci. I'm going to use TradingView. I don't know. Let me know in the chat box. Do you use TradingView, or do you use are you using MT4? I can do MT4 too, right? So all I'll do is I'll bring up see if I can find an MT4. Let me see if I can find one here. Right. Let's see. And okay. So I'll bring I'll bring in an MT4 on too as well. That way we can hear that the familiar spring. Okay. Come back to share. Come on. Come on. Come on. Share screen. All right. Share. Okay. All right. So I'm going to start with TradingView, and then I'm going to move it over to. So there's a tool here, and we're going to talk about there's a Fib retracement tool. There's two tools I'm going to actually look at today. We're going to look at the Fib retracement tool, and then we have a trend-based Fib extension tool, right? And then there's Fibonacci channel, which is very interesting too. And there's also Fibonacci time. And so seeing that we have retracements and things based on time, you can apply Fibonacci to time as well. And that's very powerful to find out where we might have exact turning points. And I can show you some examples of how we can use Fibonacci time to actually forecast when we might get a turning point. Now, again, Fibonacci's special case support and resistance, right? And your key is that, if you have, usually prices will create some type of, see if I have my tools. where are your tools here, Greg? I got tools to annotate. Okay, so you've got usually get a some type of a rally and a pullback, right? So you want to. So let's say you're here, all right? Where this is we're going to use the hard right edge of the chart, right? And this is all you see, right? Right, and you see maybe it's breaking out here. So we have a low, right? We have a well-defined area of support, right? And you see price will rally up and pull back. I call it the backward seven. Prices rally up and pull back, right? Rally up and pull back. Well, usually it pulls back. It's going to pull back to a fib level, right? And these fib levels are, basically half back. They call it the half back, right? Then you get your 38%. It's like a third back. And then you have your 61%, right? 61.8. And my niece was actually born on June 18th, right? So that's her birthday. So I know her birthday is a Fibonacci level, 618. And typically, price will retrace to the 38 and then bounce, right? You get that bounce. You get that up move, pull back, and we're just going to call it, we're going to call it A, B, C, E, D. Okay. Now, for those of you in Pipper Run, don't worry. I'm not giving away any top secrets, but this is the core of what we do, right? This is like the part of the DNA of price, right? And usually, whatever this point is, bears are trying to drive price down. Bears are trying to push price down, but then they can't, right? You get people telling you, hey, trend line break, get short, but then you get short, and then what happens? You leave the room, you come back, and price is way up here, and your margin called. You're stopped out, right? So the key is to wait for this to get back in trend. This area of support is usually an area where we're going to get some type of a launch. And if we get a launch from a fib area or a fib zone, right, we typically go 100% of the move, right? So if this was 20 pips, well, we expect it to go 20 pips minimum, right? Minimum. I mean, there's like a 618 expansion, which is like a double top. All a double top is a 61% expansion that takes you right to the old high, and you get a double top, right? So that'll be like TP1, conservative TP1. TP2 will be the expansion, and then you get that 1.618 expansion, but takes it back here. So all this is telling you is this. It pulls back, right? If it goes all the way back, we say, Greg, this came all the way back. Well, that's 100% retracement, right? So I'll show you. Let me get rid of this stuff here, right? I'm going to get rid of all this. And don't worry, it'll make more sense when I'm done. If you're confused already, don't worry. I got you. But I got to get rid of this, get rid of my eraser. Eraser. Come on. Eraser's spinning around, right? It's like I want to get rid of all, right? It's a way to get rid of it all. Okay. All right, I'm going to erase. Okay. So I'm going to erase it. So we get to our tool. I'm going to close this up. Go to our Fibonacci area. Again, we want the Fibonacci retracement. We're going to pick this one here. We go from the top to the bottom. We connect the low wick to the high wick. The low wick to the high wick. This may not be a really good example because the pullback, pull right back. Look at all these wicks. Look at all these wicks. I'm going to zoom in, right? And maybe get rid of Mr. Support line can go away. And you can go away too. Okay. And you can go. Okay. So you can see all the wicks in this right here, right? See that 786 area? And that's kind of a weak pullback. See, look how price came to the 38. And this would have been a really good entry for a scalp. I probably would have taken this, right? Price drop, 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 drop. We got an established high, long wick. We have an established high. And, we have an established low. And I didn't draw that exactly the way it should be, or did I? Let me see, let me screw it up a little bit. There you go. Let's see, move that, tighten that up, right? And you can see all that support right there, right? Now, I said the typical target was here. If I was scalping for 3 pips or 4 pips, and I got in long here at 61.85, you probably say my candles are weird. Let me get rid of go back to regular. Oh, no. That was weird. Wow. Where'd that go? Candles disappeared. No. Oh, I know. I can get out of this. My students are always saying, Greg, just hit it back. Hit the back button. No. Candles. No, I can ask you. Oh. Okay, let's try that again. Okay. Whew. Okay, there we go. Okay, so we got our candles, and price went to the 38%. We retraced to the 38. I make my 38 red, and you can do that simply by just right-clicking the chart, go to settings, and then see I made my 38 to red. Why? Because I usually pull the trigger when price comes to that 38. I'm usually in it to win it at the 38. So I hit the 38 and probably at the zero spot 6185, and went up what, 3 pips? Yeah, like 3 pips to 88, right? So with the 88, I have a bearish engulfing. I go, oh, abort, maybe get out of this trade, right? So this is where if you just took it blindly off the 382, price came back down, right? And it came back down and it tested the 618, right? But it blew right through that too, right? So it's almost like green eggs and ham, Sam I am. I don't like the 382. I don't like the 50% retracement. I don't like the 618. It went all the way down to the 786, right? So there's the 786. But look, I'm looking at the candles. I'm on a 5-minute chart. 1 candle, 2 candle, 3, knock 3 times. I got knock, 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 right? Knock, knock, knock on wood. And then bam, I got bullish engulfing candle. I have, kind of a shades of gray, kind of a rounded bottom, hammer, engulfing, right? So then I'm looking at this as a long, right? So I'm looking at a long. Price bounced off this fib. It went from a low of 61.79. Let's say I didn't get pick to bottom tick the low, even though I hit it 4 times. I had a chance to do it, but let's say I got a bad fill. I've got filled at 81. 81, price rallies to the 38% retracement. I can play in between the fibs because remember, this is special case support. This is support. And now all these become resistance, and I could have taken profit at the I got a long wick candle. I probably exited that pullback, right? So we've got a pullback. This is a Fibonacci in itself. Remember that backward 7 thing that I showed you, right? The backward 7. Well, guess what? We can put a fib on this from the low to the high. Price pulled back to the 618, right? It bounced 618, long wick candle. I'm in it to win it. Let me expand that and show you up close and personal. Okay. I'm in it here, and this is where I stack. Now, this is really important for you guys to listen to, because this is what my students and I do in pip and run. Okay. And my students, if they did the full, the mentorship, 12-month mentorship, it's a $20,000 package. Okay. Just be transparent, but don't worry. I'm going to take care of you with a boot camp, a 12-week boot camp, when we're going to compress this into a really cool package that you're going to be able to get this super quick at a very good. So stay with me to the end. I'll give you an incredible offer. Okay. So here we go. Pull back, got a hammer. But see, I'm looking for reversal candlestick patterns at or near Fibonacci area. So I have a hammer, but I also have it at the 618, right? So I have a hammer. I already have a test of the 786. So I have risk reward is going to be really good here. Because I can go back to I'm going to look back to the old high as a possible target. Because if I'm here, right? I'm here, right? And I'm looking at my target is right up here, this old high. Yeah, can I get an arrow, please? Sure, Greg. There you go, right? So I'm looking at that. I look left to find my price targets. I look left, and that's my target. So I'm looking here to get enter. I'm looking here to get long, right? And then I'm entering at the next candle break of the high of this hammer. I'm in it. I'm pulling the trigger, stop 4 or 5 pips below the last swing. I'm in it to win it. Laser precision entry at the 618, right? If I want to give it a little bit more space, then I might go 4 or 5 pips below the 786. So 61.78 will be my stop. An aggressive stop is like 2 pip stop where you won't get hit on that, right? And my target is here. So let's set up with TradingView. You can also set up your risk reward, right? So if I'm going to enter above the high and my stop is down there, so and I'm looking at my old highs right there, right? And so I'm looking for my risk reward. Look, the red represents my risk, how much I'm willing to lose on the trade, and my profit potential is everything here. But I tell you what, if it stalls out or pulls back and gives me another entry, this is where I will stack. I was telling you that this is where we stack our trades, where, you know what, the bears, this is a failure swing. Maybe it won't make a new low. If it doesn't make a new low, then the bears have to buy their positions back. And if their stops are they're gonna get stopped out, and this thing maybe so I got another green candle. I'm in it. I'm in it right there, right? I'm in. And and I just pull the trigger and then boom. That's why when I enter, you see the videos that I post, those videos that I only have 3 minutes to make a video. It's only 3 minutes long. So how am I able to hit these things and catch the winner for just 3 minutes within that time? Did you ever think about that, guys? It's not like I'm doing video editing. I don't know. My video editing skills are zero. So I record live raw and I just upload it to YouTube or I post it in Facebook. So you got to think about it. This guy is like, all he's doing is filming what he's doing, and he's doing it within 3 minutes. Okay. Or if it goes a little bit long, I might get that last in. But sometimes you see me, I'll pull the trigger on the entry and then boom, right? Like the Kiwi dollar trade, I was in it for 10 minutes because it was like 3 shots. It was like going up and it stopped just as I ran out of time, right? So then I recorded it again and pulled back, and then it moved to target, right? So that one actually did take 3 takes, right? But 3 takes at 3 minutes a take means it took me 10 minutes, 10 minutes to do the whole thing, right? So here's my pullback right there. I got a fib zone. I have a nested fib zone. So I got a pullback here and then another pullback here. Usually we get these double ones like this. The bears are trying to push price down. They can't, right? And then boom, right? So now I got a breakout above the high. I'm stacking. I'm like going, oh, you're going to give me another shot at this? Boom. I will hit 4, 5, 6 trades stacking, right? And I was telling my students, I go, no, I don't post this outside of our group, but I will go max leverage. I will max the account out. Why? Because I'm against the wall. The bears are here. There's nothing they can do. They're out of ammo. If you're like fighting in a war and you know the guys are out of ammo, you're click, 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 click. You're like going, okay, guys, we're out of ammo too. Charge. Let's go get them, right? It's like, but they might shoot you. They're out of ammo. So these guys are out. The bears are out of ammo. So then I'll go large. I'll go large and then boom, right? Old high is my target. Ah, well, okay. Flattens out like that. Well, Greg, your old high is your target. It's like, bro, if I settle and take this out flat, I still have a 2-to-1 risk reward ratio, right? If I'm trading 10 standard lots, I got like $5,218. I'd rather, if it doesn't go to the target, I don't want to go to Walmart. I don't want the thing to drop on me. So I'm going to, I might chicken out and take it, right? But sometimes I chicken out and take it there, and it goes to target, right? But this is where we can use Fibonacci expansion targets to see, like, give a pretty good idea of where this could go. Okay, so we've got this. You understand the Fibonacci, how your entries get very precise. Even here, you grab some pips there on the scalp. Yeah, it dropped. Big red, it dropped. I mean, if you've got a big red candle there, you still could get out and still get above break even. Maybe make 1 or 2 pips above break even, right? And then, but now you're scared. You see all these red candles and you're scared, and you don't take the long because you see this big candle and you're scared. And you shouldn't be. Why? Because you're like, I'm at the 6. I'm at the 7. I'm at the 786. This thing's backed up 786. Wick, 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 wick. These are full body red candles. And guess what? They couldn't break the low. They could not break it. So they're out. They try once and twice and 3 times and 4 times and boom, bounce off, get it, boom, get it, boom, right? Get it again, boom, right? And so you got this extension target, right? So I'm going to show you Fibonacci expansions. Now it might get a little crowded on the screen, but I'm gonna overlay them so you can see the relationship. But we clear about how I entered the market. Let me just check as I'm talking. I don't know where the screen is. I think there you guys. I think I see you there. Okay, all right. Let me move it over here to this screen so I can make sure that you guys are. Oh, ooh, wait a minute. Oh wow, just oh my goodness. This is come on, Raymond. Why did you give this guy kind of advice? Steven goes, any strategy that can help me survive in Forex, guys. I made huge losses and I'm brink of giving up. And Raymond, you know better than that, bro. Just give up. You tried. It's like really uplifting. Send him over to Pip and Run. Raymond. Not to call you out or anything, but bro, help a brother out. Are you getting anything from this? Let me know in the chat box or in however you're doing it. Maybe with man, what's going on here? Groups. It's not taking me to my group. Okay. So I'll just wait before I tell you expansions. Before I blow your mind with expansions. Boom. Where are we? I see Sean. I always see Sean. Thank you, Sean. Sean is a faithful viewer. Is there a link somewhere, Bill? Can you uh can you see it? Okay, let's see. Message. Trying to message. My computer is just not. Message. Okay. All right. Can you guys and you know what I can do? If you are not able to can you see me? Okay. Okay. Can you give me a thumbs up in the comments, or if you're on the hello? Okay. So I give you the Zoom link. Okay. Yeah, if you guys, I don't know, I'll just put the Zoom link in if that doesn't work. The Facebook thing doesn't work. Okay. Okay. So let me put the Fibonacci. We're going to talk about Fibonacci, the trend-based Fibonacci expansion. Very important because it's called trend-based. That we take our Fibonacci expansion in the direction of the trend, right? So I'm going to go to the low. It's a 3-point process. You click one, then you click the second point, and then you drag it down to the low, right? So that little backward 7, we're tracing it out. You see it? We're tracing that out. So we're tracing this up like that, right? So 3-point process for expansions, right? And these are expansion levels. This is our 100% expansion, 100% target. Did we hit it? Did we hit it? Sean says I can see. Great. Sean, I'm gonna hire you for education, training people on Facebook, because you know how to do everything. But I we have some people who are challenged here. 127% expansion, right? And look, and then we have the what? Look at the one. Remember, I told you this is sacred math. The 1.618 and the old high are the same, right? Isn't that neat, right? So let me go ahead and okay, I'm going to slide this over, and we're going to see, you know, if we hit the 1.618, right? So that will be our typical target, and the way we do it, we usually take off partial profits at certain areas. Even the move from this low to this high, 82 to 80, that's 3 pips. We would take that. I'm on a 5-minute chart, and I'm gonna trash all drawings. Right. Long drawings. Undo. Get back. Yes. I was trying to do the annotation. That's what I was trying to do. There we go. Okay. So, so this is our expansion. Let's see how far we went. I would have gotten out here. I see flat candles, or would have taken off a large percentage of the trade off. Okay. And let's see. But see, now I'm looking at time. It's a 5-minute chart. It's 5, 10, 15, 20, 25 minutes. 25 minutes, I'm out. Because usually the longer you stay in the street, the faster you become roadkill. Okay. So it's just called pip and run, not pip and stay. So I'm running. I'm out of here. I see people, I'm hanging on, Greg. It's like, yeah, maybe you make money. I don't know. But the risk is too high. I'd rather wait for another Fibonacci, right? And we hit it, right? Bam, blew through it, right? But it took 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes, an hour, okay? An hour, I found something else to do. Or I could have left it, and then would hit our target. But honestly, I would have just taken it. Many times I've overstayed my welcome, and then give it back, and it sucks. It feels bad. I don't want to feel bad, right? So now we get an extension, and look, 618 got blown out. There are more extension targets though, and my boss would say, "Oh, Greg, I don't like expansions because it limits your profit." Yeah, but if I got out at the 127% expansion, I'm not crying. Now, did we get to the 2.24? There's a 2.618 right there. at 61.98. I don't think we hit that today. Oh, did we? Oh, but here we go. Look, a pullback, right? So let's we can take off. I'm gonna remove we'll leave the expansion targets. This is a pullback here. He said, well, where did I draw my fibs, Greg? Well, we can just take the fib again. I'm gonna overlay it, going back to the low, and go all the way back to the high, right? Now, there's a 23% retracement right here. When you have an aggressive, strong trend, then usually price will bounce off the 23. If it's a regular trend, it'll go down to the 3.8. But I would like to see a bounce at a fib. I'm not entering here. So you get FOMO. Oh, it's going up. I better jump in now. It's like, nah, don't jump in now. You want to wait for that. You want to wait for that pullback. You want to look for that opportunity to get it at a cheaper discount, right? And well, it bounced off. It bounced off to 618 because it broke the high, came back and retested, didn't get back down to here. Another way you can take your fibs is wherever we get the pause. See, we paused right there. You can take your fib from there to that high. And you can see, look, the 38% retracement right there, right? So you got long at 61.92. And then, boom, they hit the, look, 2.618 expansion target. I'm going to put a line across there like that. So we can see where that 2.618, usually that's an area of very strong resistance and price will retrace back from there. Let's see, right? But look at that nice move there. That was let's measure that out from here. And that to that high, we're on a 5-minute chart. It was 8 pips. Okay, so and 8 pips on 10 standard lots, that's nothing to sneeze at, right? That's like $800, right? Or $80 on a 100K lot, right? And then you got that, right? Look right at the line, right? And then I would gotten, from here and the 2.618 right here. Look, right to the fib. Because remember, guys, whether it's the powers of the universe or God's hand in this, or it could be algos and computers doing this. But if you go back and you look at Fibonacci over the years before computers, where they actually applied this stuff out by hand, you still see Fibonacci relationships. So it's not all due to computerized algo trading, even though computerized algo and AI trading is it's programmed to recognize Fibonacci. So now these things are really crisp because it's not just some guy going, oh man, there's a 61.8 here. No, the computer goes, it is right here, and it gets long, right? It's very mechanical, right? It finds the level, gets in, finds the level, gets in. So I'm getting in with the algos. People say, well, are you using a bot? Not yet, but yeah, I'm entering with when the bots are, right? So, okay, we're at here. Look, whole number, round number, resistance, pullback, expansion, right? Then we get a pullback. Now, if you take this low, and at this point, I'm probably gonna remove all the lines. Okay, there is higher Fibonacci. I'm gonna remove all the drawings, right? The pullback, we restart our fib from the pullback to the next high where you see pullback, right? And you can see that price rallied and went down and went to the 38% retracement right there. And if you entered there with a stop, right? Let's see how far did it go up, right? And came back down, right? And then you have another one, right? So you can take another fib. If you miss that trade, don't worry. A lot of times you get FOMO and you go, oh, I missed the trade. And then you chase the trade, and you're buying on this candle, and then it drops, and now you feel bad, and then you get out, and then it goes up, right? So you want to wait for your level, be patient, wait for your level, right? So you got to pull a race to the upside, pull back to the 618, and it's kind of janky around. I mean, this is an old trend. I mean, literally, we're like from 5 p.m. Now we're like almost like close to midnight. You know, sometimes you get these reversals, right? But let's see. We're bouncing off. I'm gonna remove the other Fibonacci, and we're on this one. So 50% didn't like that. 618, it's hanging in there. 786 touching, right? At this late in the game, I probably wouldn't touch it. I mean, I've been out, but let's say for giggles, we get hit and get this pullback right there, right? And well, first target's the old high. Boom, we hit that. Our entry, we have a morning star. Um, all right, now we don't do. I mean, we did back in the day. We've kind of evolved past candlestick patterns, but this is a really beautiful morning star pattern. Big bearish candle, bears in control, small body candle, indecision, and then a decision candle that says, nope, I don't think so. At the 618, this combination is a powerful combination for getting long, right? And then you can see price rallying. Oh, stop. I didn't mean to do that, right? And so we've got a perfect storm of entry right here, right? And then we can also, okay, so now we can take a Fibonacci expansion from here too. Go to your expansion tool. Remember, it's 3 points. Click 1 point, click the high, click the pullback, right? And now we have the zero expansion, and then you have the 100% expansion, 6208, and then you have the 127% expansion. So if we got long here, let's go ahead and do our thing, right? We got long on that candle, our stop maybe below the Fibonacci, below that. And I add there's an 88.6 the Fibonacci of last resort, the 88.6, but then you have the double bottom is the old the 100% expansion or the 100% retrace. So this retraces all the way back to where it came from. That's 100%. That's a double bottom, and that's bullish too. Double bottoms are 100% retracement, right? So if this went up 20 pips and then fell 20 pips, that's a double bottom. Extremely bullish, right? So, but let's say we go to the 100, I tell you, the typical price target is the 100% expansion. But, you know, sometimes you can mix some things together like bankers levels. And you can say, well, the bankers levels at 25, we're at 0, 8, 10, 14, 20s right here, and 25 is just a little bit higher. Will we hit that area, or will we get TP1 will be right here, 6208. And look, double top, reversal. I said probably even I got here, probably break even, got out because I got successive red candles at an old high. I'm not liking that. Maybe, you know, again, this is a very old trend. It goes all the way back to 5 p.m. yesterday. And now we're like at 11 or so, and we're topping out, right? But we came back right back to the 618 again, right? Came right back to the 618. No, actually 618, yeah. So we came back to the 618, bounce, right? So I might, you know, I mean, conceivably you get back long at the 618 with a stop. Place your stop, go like 2 Fibonacci's below and place your stop there, right? So you say, okay, I'm gonna place my stop 2 Fibonacci's below, right? Scott Fields, hey bro, give me a like on my video, thanks. And then we rally there. Look, top. Ooh, I don't know. If I got in long here at 02, we went to 06, 4 pips. 4 pips, 10 standard lots, you know, it's $400. You know, I take it, right? And then we're like hovering at the 23% retracement. And it's moving sideways. Look what's going on with price action. We went from a very strong, beautiful trend, beautiful higher highs and higher lows, nice structure. Put that British accent on, it sounds really fancy. It's good structure, higher highs and higher lows, right? So you got the night, but then it's like it's moving sideways through the channel, right? It's like three drives to a top. Drive one, drive two, drive three, topping. It's topping. It can't get out of its way. Before we have, look at these big wide steps, right? Look at these big wide. This is a nice, see, the waves do not overlap. They stair step, they do not overlap until we get here, and now they're overlapping. We went from, look, stair step, nice, clean. This is a strong trend. You've traded trends like that, but the moment you start getting overlap, this thing is getting ready to go, right? And so then we start looking for like downward move, right? And we have then pip and run. We have the predictive function that allows us to get into this 4 or 5 bars. Is like, I'm probably not. You see, I'm like not really liking this because I'm looking at my other indicators. Like, I would be selling this, but that's for people that want to join my course, right? Anyway, is this good? You like this so far, right? And you can do it for the downtrends too. Let me do a downtrend. Stick with me again. I'm going to share with you how you can, if you found this valuable, you want to continue working with me, you think you could benefit from working with me on a deeper level for longer period of time, just let me know. Give me a 1 in the chat box. Let me know. All right. Let me know. I'd love to work with you. I'd love to build a trading army. Remove all drawings. What's this? This is a drawing. Why isn't, oh no, I didn't want to remove those. Okay. Right, I'll move my an annotation. Yeah, I want to get rid of that. Okay, there we go. Clear drawings. Okay. All right. So this is let me get rid of that. So this is our downtrend that we went before we had this uptrend, right? So we have 3 points for our projection target, and we also have a fib for a downtrend. So I'm just going to take the same chart, start at the top, and extend it to the low, and then we have retracement. Look, price rally, backward 7 going in the opposite direction, right? We rally with 618. Look at that 618. There's that sacred number, 618. Like I said, you can look at trees and nautilus shells. You remember having that textbook when you were a kid with a nautilus shell? What does this have to do with math, right? I want to go to the beach and not be here. But what's that? Because it unfolds in the 618, right? 618 Fibonacci. So price, you go to some of the advanced ones, right? Like if you do like the Fibonacci, like there you go. See, and you can see, look, it hit, you hit that the edge of that arch, boom, in the arch, boom, 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 right? It's Fibonacci arc, the arches. But let's see right here, right? You can use Fibonacci time sequence. We have time zones, right? Instead of going from the low to the high, you go from, you take that swing, right? And so you get areas of confluence where you look, topping, look, the bottom, look, Fibonacci time, forecast at the bottom, forecast at the top, right? That's, I'm gonna run out of time, but there's a lot of things you can do. So you got your retrace of the 618, and this is what you see. You see that, right? You see other things too. You'll see a head and shoulders. The shoulder will come up to a 618 or a 50, right? Hawaii, right? So we're gonna take our Fibonacci expansions. We're gonna click the top, click the bottom, and like that. 100% expansion is 6191. Old lows right there, but so you can go old low, see what the old low is, and then draw and see what the fib is. So if that is our low, well, that's like this 127% expansion. right? And if we go back here, it's like almost near the 618, right? So we went short there on that because it's a bear flag. It's a flag in a downtrend, right? And then boom, look at the 618 right there. Boom, right? It's basically this length, and then this is 160% bigger than this one, right? 1.618, right? So if this was 10, if this was a length of 0 to 10, this would be 16, right? That's how you can explain that, right? So you got, on the Elliott, that's an ABC, right? ABC. We say in Pip and Run, we say ABC, see you later, right? And what comes after C? Well, and we all see that one, heel toe, heel arch toe, and our predictive function would have been on fire, and everyone's getting long. I mean, everyone's getting short. We're getting long, and then we get a nice reversal, right? Retest the low again. But see, where is that? Is that level? No. But see now, we got a little bit. Make sure I'm locked in, right? Right. So we skidded past the 618. I want to bring it right there on that line, right? So these Fibonacci levels can be look, but we can't get a sustainable close 5, 10, 15, 20, 25, 30, 35 minutes, 5, 10, 15, 20, 5, 10, 5, 10, 15, 20, 5, 10, 15, 20. It can't stay longer than 20 minutes below the 1.618. Look, another 5, 10, 15, 20 minutes. And then finally, boom, right? And that's where we took our fib from that area, right? Or we could have taken this one, right? So, yeah. So anyway, when you put Fibonacci in, you can confidently enter the market. I mean, you can do, and it works for everything. I've been using New Zealand dollar because I did well New Zealand dollar, but you can use it on gold. You can use it on stocks, right? And you can be a championship forecaster, right? I mean, if you go back, like if you can go to dailies and weeklies too, and that's when I wrote the Gold Rush Blueprint. I was like looking at I was looking at gold. Well, where are we? There we go. Look at that, right? So let's say you got this one. Look at that. Pull back. You take your fib. You want to start off with your retracement. Find the low, right? Low to the high, and then price dropped right down to the 50% retracement. I'll expand it. It rallied to the high, came back to 50%. If you got long here, or if you did, let's say you did this one, right? Look at that. Price rally. Look, red line 382, long, stop. Like go back maybe 2 Fibonacci's, right? Put your price in there, right? And then you need your Fibonacci expansions to kind of give you a clue of how far this could go. Let's give you a rough estimate. So I click a point, click a point, click a point. 100% expansion, 2152. That'll be a price target. And then, boom. I've got my risk reward all set up. Oh, came horseshoes and hand grenades. Boom, we almost, right? Came really close. And we could take it. But we're still in an uptrend. We haven't broke the uptrend line, right? We haven't broken the line. We could take another fib. We could take a fib from the pullback to the high. Price dropped 786, right? And it's a stalling out. We're in a range, right? So I didn't get very far. And now we're going into, right? So in a range, Fibonacci is not going to help you unless you get to a really small time frame. Like if you went down to a 1 hour, you went down in time frame, you'll see some stuff, right? You would see Okay, we blew those out, right? So if you go see on the smaller time frame, though, there was like lots of trading opportunities. Look, bounce up to 23%, right back. Look, it's respecting the fibs, and then finally just dropped. And this is what 1 hour. Oh, we got down to 1983. That was a long time ago, right? And then, but look, bounce, and they kept going.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!